Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to this week's edition of the Tax Talk with Ajay right here on ITV Gold. The show is brought to you by SAI CPA Services, a very well-known professional tax accounting firm located in the state of New Jersey with multiple locations, but they can assist you from anywhere in the US, whether your personal taxes, your corporate taxes, or even a tax audit, or if you want to start company, you want to set up a company and you want to start a business, they can guide you and they can also advise you on your investment to save your taxes. Remember, SAI CPA Services believes in one thing: your taxes must be done right, and that's why they are one of the most reputable firms in the state of New Jersey. You can contact them at 908-380-6876 or visit their website saicpaservices.com. With that note, I'd like to welcome Mr. Ajay Kumar of SAI CPA Services with over 20 years of experience when it comes to personal and corporate accounting and taxes related matters. Mr. Ajay, welcome to the show. How are you?
Thank you, Sanjeev. I appreciate the kind introduction.
Kind and very true introduction, because that's what SAI CPA Service is all about, and that comes from my heart, because I don't even need to read the script, because I know what SAI CPA Service is and I know what their clients think of SAI CPA Services and viewers. That's why I strongly recommend you to contact SAI CPA Services for all your personal tax needs. Last week we talked about the IRS audit and the red flags, what triggers red flags, and Ajay really gave us a lot more information that we really need to know, that how we should be careful when we file our own tax return and what are the mistakes that we can make unknowingly, which can throw a red flag on the IRS computer and that can trigger audit. So that's what we talked about last week. But now let's continue that in the other terms, in the sense that how does the process work? Once IRS decide to audit your tax return, then how does the process work? And Ajay is going to take us from point A to point B to point C with this process.
Yeah, absolutely, Sanjeev. Thank you. So once the IRS has decided, as we discussed in the last segment, we were talking about IRS audit red flags. But let's move forward. Once the IRS has decided to audit someone, audit a taxpayer, what's the process here? Now, the very first thing that's going to happen, you will get a notice in the mail. You will typically get 30 days. IRS will explain that we are looking at your tax return and this is missing, or we do not agree with the information that's submitted with your tax return. It's a computer generated letter. You have 30 days to respond. You can call IRS. There is a phone number on the top left hand corner on the very first page. You can call IRS to ask any information or to understand the notice or respond to that notice. If you do not understand it, take to a CPA, call IRS, make sure you do respond to this notice in 30 days. Once you have provided the information, IRS can take anywhere from 30 to 90 days. If IRS cannot sort out or does not agree with the information that you have submitted, they will typically have a second letter sent out to you. If the notice is not resolved by second time, depending on how much the amount is, either the IRS will just send you a tax bill that we do not agree with the information and here is what you should consider paying, or they will assign an auditor. In most cases, personal taxes, unless there are significant changes or unless they are coming through a flow-through entity, personal taxes do not get the auditors assigned. It's mostly the businesses where the IRS can collect a lot more money. That's where the IRS assigns the auditor.
So let me just ask you a question, so that way at least we all are in the same loop. Personal taxes do not get an auditor.
Personal taxes typically do not get an auditor unless the amount is very significant.
So then what one should do in case if their personal tax return is audited and they receive a letter from IRS in the mail, what do they need to do? Visit IRS office or give them a call?
Well, the very first thing is you read the letter, you see if you understand it. Do you agree with the information that IRS is proposing? Do you really know that you missed something? If you agree with the information, then you can propose to pay the taxes. You can just agree that we agree. There is a box that you can say, we agree with the proposed changes, please send us the bill. Or you can dispute it. No, this is not true, this is how it happened. You can describe your situation, but if you choose to describe, if you choose to not agree, then make sure you call IRS. You let them know. Otherwise, in 30 days, if they don't have your response, they will assume that you did not respond. And they will send another notice, and then they will try to create a tax bill out of it. So if you are trying to dispute the notice, if you are trying to respond to the notice, make sure you call IRS, let them know that this is how it happened. Please have them note it down in their system. Tell them that you will be sending a notice. Make sure you send this notice via certified mail, so you have a proof.
So you can contact IRS, you can give them a call, or you can take it to your accountant, whoever filed the taxes.
If you did not file your taxes yourself, if your accountant, if a CPA filed your tax, it's a good idea to take this notice to the CPA, let the CPA explain you what happened.
All right.
In a lot of cases, if you did not provide a document to the CPA, you can provide the document and let them compute the taxes and see if it matches with the IRS liability.
Okay, so that's for the personal tax return. Now the corporate tax return usually gets an auditor. So auditor can visit your place and to come to look at the tax returns?
Right. So I'm glad you brought it up. What used to happen, IRS wouldn't send an auditor to somebody's home. Now in these days, having the home address as a business address is very common, especially after COVID. A lot of people work from home. So in a lot of business audits, it's very common for the auditor to show up at somebody's home. A lot of time people assume that it's a scam. Auditor will ring the bell, give the business card, and just leave the letter. This is what I wanted to deliver. I wanted to say hello, that this is what we are looking at. Here is the notice. They will not discuss the case with you.
They will not enter the house to discuss it.
Well, unless you invite them.
Yes.
They're not supposed to enter the house. They're not supposed to be taking anything from you. But at the same time, don't assume that the IRS cannot come to your home. Don't assume that the IRS auditor will never visit you.
Wow.
A lot of time when the business address is your home address, IRS is technically visiting your business place. And that could be your home address.
Okay, interesting. So that is for the corporate tax returns. So now, having known this personal tax return audit matter and the corporate tax return audit matter. All right, so thank you so much for that information. And viewers, in case, God forbid, if you are audited for any one of these two matters, and in case you're wondering what to do with it and hesitant to call IRS or to go to CPA, or maybe you personally filed the tax return and not sure what to do, my one advice is to contact SAI CPA services immediately. You can give them a call at 908-380-6876 or saicpaservices.com. Should you not wish to contact anybody, that's okay. If you want to tackle this matter on your own, you may be able to do so. But do something. Do not just ignore that notice. Do something. Absolutely. That is very important.
Very good advice. Indeed.
All right. So that is a one audit, income tax audit. There are other two audits somehow related with your business, and that can affect your tax return as well. Absolutely. And AJ is going to now take us into workers' compensation audit. This is one area where insurance company wants to look into it, IRS wants to look into it, because payroll is involved.
Absolutely. But before we delve into workers' comp audit, Sanjay, we want our viewers to know that IRS has up to 6 years, typically, to look into any tax return. If you have material misstatement, meaning you did not report at least 20% of your income, then this statute of limitation does not apply. Then IRS can go back as many years as they choose.
Wow.
If there is a fraud suspected, there is no statute of limitation. But typically, IRS has up to 6 years to go back to look at any number. So when you file your taxes, make sure you keep the right receipt, right documents, right support, the bank statement, whatever you used to do your business taxes, especially if you have a small business, make sure you keep the right support with you for at least 6 years.
So now we're in 2024. It would be safe to say that you must have all the records from 2017 onwards to
Absolutely.
2023.
So the tax return including 2017, and more important than the tax return we have a copy. IRS already has a copy of the tax return that you filed.
The
backup. How did you came up with those numbers?
Receipts
the bank
and everything.
statement,
Yeah,
the
receipts and everything. Yep.
You cannot say, I gave the money in the hundi. That does not count. I gave the money to the panditji. That does not count. Show me the receipt. Show me a contemporaneous receipt. Show me the receipt that has the date of the year that's being audited.
All right. So that is the one added into income tax audit matter. Now let's go to workers' comp.
Absolutely. So workers' comp audit is typically not done by IRS or the state. This is one audit. So we'll talk about one IRS audit, we'll talk about one state audit. This audit is typically done by private companies, the insurance company.
Yes.
The way it works, all these insurance company, workers' comp, they take some insurance based on the amount of payroll you have. If your payroll is $40,000, your workers' comp insurance is X amount. If your payroll is $80,000, your workers' comp insurance amount is going to be twice, double. So the insurance that you pay, workers' comp insurance that you pay, is based on the amount of payroll that you had, and it's typically the fiscal year. What I mean by fiscal year is, if you take the workers' comp insurance from March 15th, so the year starts from March 15th till next year, March 14th. If you take the workers' comp on July 7th, their year starts from July 7th to next year, July 6th. So what they will do at the end of the period, they will say, show us the payroll report. Show us the quarterly 941. It's a type of federal payroll report. Have your accountant put a reconciliation together from July 7th of last year till July 6th of this year, meaning whenever your workers' comp started, that's what they will try to verify. And that's an easy part. You can do it yourself, the payroll company can do it, the CPA can do it. What's tricky here is, if you had 1099 people and they did not have their workers' comp, then you are on the hook to have the workers' comp for the contractors who did not have the workers' comp. So whenever you hire a 1099 contractor, make sure you check, are they insured, are they bonded, do they have the workers' comp for their company? Because if they don't have the workers' comp, or you do not take the workers' comp certificate from them, then you are on the hook to have the workers' comp insurance for those 1099 as well. So at the end of the year, the insurance company will say, you took the insurance based on 100,000 of payroll. Now your payroll turns out to be 120,000. That's why you owe us 20% more. In many cases, if your payroll turns out to be lesser than what you initially thought it's going to be, and you bought the insurance for $100,000 of payroll, the actual payroll turned out to be 70,000. In that case, insurance companies expect to refund you the money.
Okay, interesting. Now, we're going to get more into detail with this workers' compensation audit, how often they do it, why they do it, and how it's related to your company's tax return. That's all coming up right after this messages. Stay with us.
Did you know IRS collected almost 5 trillion, not billion, trillion dollars in 2022 in taxes, and almost 3 trillion came from the individuals like you and me. Corporations paid less than 10% taxes out of $5 trillion. Can you believe that? Most of the taxes are paid by people like me and you. So you better do your taxes right.
Well, people like me and you. All right, so basically people like us.
Absolutely.
So the point is that, corporate tax, obviously percentage is a lot lower than the personal, taxpayers.
Absolutely,
That
almost
is interesting.
60% is paid by individuals.
That's why you need to have, that's why this company gives you an opportunity to be an entrepreneur, to have your own company, to be your own boss. But once you have your own company, you're on your boss, that means you're going to hire employees. When you're going to hire employees, you're going to have their payroll. And once you have their payroll, your insurance company want to know that how many employees you have and what's your payroll, because there is a workers' compensation policy that you must have. And in today's topic, one of the issues that Ajay is advising us and letting us know about workers' compensation audit, what happens and why the audit is being conducted by insurance company, which affects eventually the tax return.
Absolutely. So the workers' comp audit is one audit that you can do yourself. You don't have to be scared about it. There is no government authority included in workers' comp audit. It's supposed to be fact-based. Whatever the payroll was, the gray area is, how about the 1099s? Did those 1099 workers, did they have their own workers' comp or not? And if they don't have the workers' comp, you are supposed to include them in your workers' comp information, so the company can charge you workers' comp insurance amount on those 1099 workers as well. So, but it's supposed to be every year. There is nothing to be scared about, and it's not calendar year based. Anytime you change the workers' comp company, they will do this audit again, and it's supposed to be from the day the workers' comp insurance policy started for the next 1 year.
All right. So can I just ask you some
Please.
basic questions, layman questions? All right. For me, and then obviously for viewers, at least to make it very simple. You say if it's a W-2 employee, makes it very simple, because W-2 employees on the payroll, workers' compensation, coverage will not have any issue with it. You say 1099 must be included. That means 1099, a consultant of that company is also part of workers' compensation coverage policy.
Unless the consulting company, the contractor have
They have their own insurance, unless
if
they have their.
own insurance, then you don't have to include
Okay, so my point to you is that let's believe that consultation, the company doesn't have workers' compensation for their employees, and here is the individual is a consultant of the corporation ABC. That means that 1099 consultant has an equal right as a W-2 employee to file any workers' compensation related claim.
And that's the problem, and that's why they are charging the insurance.
Correct.
A lot of times, a lot of small businesses do not classify the 1099
Yes.
and W-2 properly. A lot of time people have this person working every Friday, every Saturday in a busy restaurant, and this is on 1099. If somebody is working for you constantly in a defined period of time, you are providing them the training, they are working at your location, they are using your tool. It's a employee-employee relationship. It's not a contracting relationship. Contractor means the plumber. He brings his own tool.
Yeah.
He tells you, I will come on Tuesday. Between 2 to 5, they are deciding their hours. You don't decide who is going to come. The plumbing company is deciding who is going to show up. They are deciding when, they are deciding where, and they are bringing their own tool. You don't train the plumber. In the employee-employee relationship, a lot of times you tell them, this is the POS system,
Yes.
this is how you click, this is how you do it, this is how you greet the guest. So you have to be careful when you have this employee-employee relationship, who is the 1099, who is the W-2. And just because there is a lot of misclassification,
Okay.
that's when the 1099 needs to have a proper workers' comp.
And that's why insurance company wants to know your 1099
Absolutely.
consultants also as part of the workers' compensation coverage. How often insurance company would do workers' comp audit for any corporation?
It's a mandatory audit. It's supposed to be done every year.
Every year.
Or when you change the insurance company.
Okay.
See, think about it. The amount of insurance policy that they're charging is based on your estimate of the payroll. They will ask you, how much payroll are you expecting in the year, in the fiscal year? And you say 100,000. And they'll say, okay, you're supposed to pay us $1,000 in this insurance. If your actual payroll turns out to be 150, then the workers' comp should have been $1,500. So initially the workers' comp is issued based on a payroll estimate that you, the business owner, is providing to the insurance company.
Okay, interesting. All right. Now, in case if there is one claim filed, right now we're just talking one claim per year, insurance company is going to have their eyes wide open to audit that company. Is it true?
Well, it's not, the audit is not based on the claim. Even if you have no claim filed, the insurance company is doing the audit or actualization.
No, that's true. But in case if there is a claim, one or more than one, then obviously they will.
Well, no, the claim does not get filed with the insurance company.
Okay.
The workers' comp or the unemployment claim goes through the state system.
Okay.
All these companies are supposed to pay to the state.
Correct.
So when you file the unemployment, or somebody in your company files the unemployment, or you file some sort of claim, then the state will increase your SUI, state unemployment insurance rate will increase slightly. So more people claim the unemployment, higher the rate you will have. And you can dispute the rate if you.
Okay. All right. So that's a workers' compensation audit matter. Anything else you'd like to add into it?
The only thing we'll say, there is IRS audit, federal audit, there's a state audit, Department of Labor audit that we'll talk about in the next section, where you need more professional help. This is one audit. As long as you have the papers right, as long as you have the quarterly payroll reports, W-2s, W-3s, 1099s, you can handle this audit yourself.
All right. So before we go into the next category, which is Department of Labor audit, we have covered so far in this episode income tax audit and workers' comp audit. I believe that you wanted to add some more information on income tax audit.
Absolutely. So income tax audits are typically two types. Income tax audit depends on income, and we are talking about the IRS audit here. The key here is whatever you agree with the IRS, this is a government authority, they will forward the same information to the State Department as well. Let's say, for example, you submitted your tax return and your taxable income is 100,000. IRS did an audit and said, no, it's not 100,000, it should have been 120. Once you have settled the case with the IRS, same information will be forwarded to the state automatically, and now in few months you will get a bill from the state that we have been told by the IRS that your income should have been 20,000 higher in this example, and you will have a bill from the state as well.
Okay. All right. So viewers, there you have it now. Income tax audit, the process of income tax audit and workers' compensation audit matter from point A to point Z. That's what covers so far. Now there is another very important audit in the category also. It's called, in a short form, they say DOL audit. That means Department of Labor audit. This is done by the state where you live, where you do your business. That's where it's done by Department of Labor audit. And this audit can be very lengthy, can be very painful, can be frustrating. So AJ is going to give us information on that.
You're 100% right, Sanjeev ji. Department of Labor audit, believe it or not, can be more frustrating than the income tax audit.
I know.
And the key here is what they're trying to determine, and it's typically generated by the state. Not that the federal government cannot do it, but mostly the Department of Labor audits are triggered by the state. Mostly the income tax audits are triggered by IRS. So state is depending on IRS to do the income tax audit and then feed the information to the state. In the same way, Department of Labor audits are done by the state, and the IRS is expecting the state to feed that information to the Social Security Administration, to the SSA. So Department of Labor audits are typically to find out, to verify if every employee that you have or every subcontractor you have is rightly classified. If the 1099s that you are issuing, should they have been your employee? If you are issuing the 1099 to everybody that you should have issued, a lot of time Department of Labor audits can trigger the income tax audit. Consider a situation, you have a lot of subcontractors, let's say it's an ethnic restaurant, Indian restaurant, you have people working in the kitchen who do not have the papers and you are paying them cash. At the end of the year, you filed your own taxes, you claimed all those expenses. Now the Department of Labor is looking at it. Who did you pay this 50,000? Oh, that's Amigo. Well, find the he doesn't have the social security number, sir. You cannot claim this expense if you cannot issue the 1099. Okay, now the $50,000 of expense has been denied on your tax return. What it does, it creates $50,000 of additional income. So a lot of times Department of Labor audits can trigger an income tax audit. But the classification is, they are trying to see if the person is truly a 1099 contractor or should have that person be an employee. And the criteria they are looking at, as we discussed in our first segment, who is providing the training here? Where is this person working? Who is providing the tools here? Who is deciding the hours here? If you are telling somebody, you have to come every Friday, 5 p.m. to 9 p.m. because that's my busy time. They are coming to your location. You are not saying, well, you come or your wife can come or somebody can come. That's not how it is. You are telling them you have to come at this time at my location and work in this uniform. That cannot be a contractor. You cannot be issuing those bussers or those restaurant help a 1099. That wouldn't be okay. A 1099 relationship means the person is deciding their own hours, is trained, bringing their own tools, and has more than one job. A plumber who is coming to your home, fixing your home, is not relying on this income only. A plumber is fixing hundreds of homes. If the plumber makes $100,000, probably he made $1,000, $2,000 from you. So if a 1099 contractor is making most of the money through your relationship only, that's a big question mark. Is that really an employee? Consider trucking companies. They have this owner-operator truckers, where the owner operator, meaning the owner has their own truck, and the trucking company is getting the load and asking the owner operator to deliver the load, and they issue a 1099. But if this owner operator is only working for you, delivering your loads, is that truly a subcontractor? You are telling the owner operator, take this load on this day. The owner operator is taking the load. The owner operator is only working for you exclusively.
Okay, so that means, when it comes to Department of Labor audit, in a short form, we can say that, for your company, you need to build compliance.
Absolutely.
So that way, Department of Labor's guidelines must be followed, and, to save yourself from penalties and additional taxes. Non-compliance can do that, so make sure you follow compliance. Anyway, just to add a little note that, for more information on DOL audit, you can always contact SAI CPA services. They will guide you once they understand your company's nature of business and whatnot. So you can contact them. Additionally, you will see it on the screen, a couple of printouts. That way you will have more information on this Department of Labor audit, because we almost come to an end of the show. Ajay, we need tax quote of the day from you.
Absolutely. Well, today's quote is, money moves from those who do not manage it to the people who manage it well. So you manage your money well. Make sure your money is working for you. You are not working for the money. You have it right structure around it, and you have earned interest. You have put it into the right market. Make sure you manage your money well.
Okay, that means that you're filing your tax return. That means you're not really managing your money well. You need a certified public accountant to do your taxes right, and make sure you do that. That's why you need to contact SAI CPA services. I'm just adding my, my 2 cents into that today's quote, but it's a very important quote. Ajay, with that note, thank you so very much for your time.
Absolutely.
Thank you for your guidance and information on this taxes matter. I am Sanjeev Pandya, wishing you all happy and the tax-free days ahead. Until we meet again, you take care and so long.
Thank you.